Hello and very warm welcome on this edition of the Mutual Fund Eye. My name is Vandita Shivle and I'm here to take up your queries. I have received a lot of questions. These were like common questions that I've received from multiple people. The questions were like, my NAVs are falling right now. Shall I redeem my investment? Is it the right time to invest? There were questions around balanced funds. Are they better than equity funds? Stocks versus mutual funds. What should I go for right now? Another questions were on sectors. Which sectors should I choose and which individual stocks should I look at? There was another questions on mode of investment, whether it should be lump sum or SIP. So, the answers to these questions are pretty similar. So I thought I'll take up all these questions together and try to address these queries, and maybe then on individual portfolio based questions I'll answer later. First things first, I need to understand one thing from all these people who have asked me this question: why did you invest? Are you clear with that answer, or are you still wondering why did I invest? Because it's more important to address why here rather than where to invest. What's your purpose of investment? If your purpose of investment is not clear in your mind, then why are you investing? And I have been saying this thing over and over again, that before you make any kind of investments in any kind of financial instruments, I am a great fan of mutual funds, but I have never been biased and looking at the portfolio, I've given multiple options to people where they should be investing, because different people have different needs, and that is the main thing. Why are you investing? If you know this why thing, where is just a byproduct. A lot of people say this, and it's a very common way of saying things, but this has a very deeper meaning attached to it. Why you are investing? If you are investing for long-term investment, if you are looking for retirement planning, say for example, what does it mean? It means that you have to look at a longer time horizon. A lot of people complain, they say that all the advisors, mutual fund advisors, they keep telling one thing, that keep your horizon long, keep your horizon long. That is not the thing. The thing is, if your purpose, you invest in any financial instrument looking at the purpose of that particular instrument. When you say mutual funds, there are various categories. They have a plethora of options, and in those options we have various categories. Like if you're looking for tax saving, you have ELSS. If you're looking for low risk, low cost kind of things, then you have debt. You need stability in your portfolio. If your time horizon is less than 3 years, then you go for debt category funds. If your time horizon is 5 years, we recommend equity oriented funds. But the irony here is that a lot of people are not understanding why you are investing, and they want to redeem their investment, and that is not right. When you're looking for retirement planning, the investment horizon has to be long enough. So please do not look at your portfolio. You have just invested for 1 or 2 years and you are thinking, oh my God, my NAVs are falling. What do I do right now? See, the entire purpose of SIP investment, when we say lump sum or SIP, both are completely different strategies. But the purpose of SIP is rupee cost averaging. Looking at your needs and expenses right now, you have decided that you will invest in parts at regular intervals. So you are doing systematic investment planning, and you are giving certain amount and buying units. Now the purpose of buying unit is what? That you can get more units and you can get more NAVs, right? That's how you build your NAV, and that's how you build your wealth, by buying more units. When do you buy more units? Isn't it obvious that you buy more units when the markets are down? Right. So that is why I have always said one thing. Do not stop your SIP if your goal is long enough. If your vision is, say, 10 years from now, 15 years from now, then why do you, oh, that's my iPad, so you can forget it. Then why do you want to redeem your investments? That is my only question. Even if you redeem your investments right now, it will give you nothing. That is my only worry here. If you are planning to redeem your investment, do you think you will get a very good price at which you want to redeem your investments? No. Redeeming your investment means, for people who do not understand, you are taking out your money back from a particular fund in which you have invested in. So my question here is, when the markets are down and when you already know that there is a certain amount of risk, there's not certain amount, I would say that in over a decade this has been like the real big crisis. But one thing you need to understand, had it been really bad for the markets and there was no chance of recovery, do you think that economy would still continue? We should close the markets, but there has been lockdown, there has been other things. Were the markets closed? I mean, that's my only question to you. No, right? And your question that when do I invest next means that you're keen in investing. Whenever you are keen in investing, you need to take risk in your hand. You are taking a risk. It could be bigger, lower, in a medium range, depending upon your appetite. But the question is, risk is always there. Markets are always volatile. And see, if you are not ready to take risk and you are like, no, and if you're saying, I'm not investing anymore looking at the scenario, it's completely acceptable for me. But thinking, when do I invest next, just because you're looking, you want the markets to go up, that's not how markets work. Markets are always, they're never in a upward direction or an upward trajectory. If you have, if you look at the charts, you'll see that the markets are in those, they move like up, low, up, low, up, low, steep. There are various patterns of market. But my only thing is that what I'm trying to tell you here is that markets will recover and you need to believe in this. Now, next question, mutual fund or stocks? What do you think would be a better option? See, we know that the markets are not doing good, right? So stocks, obviously, if you invest in a particular stock, I say I've invested in a single stock, the chances of the company going bankrupt are higher. And obviously the probability is higher during the crisis. So definitely your amount going to zero when you invest in a particular stock is much higher, isn't it? When you invest in mutual funds, you are investing in either 30 to 40 papers if you are investing in debt fund. If you are investing in equity, you are investing in 30 to 40 scripts, right? So these companies altogether cannot go bankrupt, right? So whenever you invest in mutual funds, you are diversifying, right? And because of its diversified nature, I'm telling you, the chances and the probability of mutual funds going low your values going zero, the amount that you've invested, is really low. In fact, practically it's not possible because the kind of way it's managed, the way it is handled, because of its diversified nature. That's what I'm trying to tell you. So definitely, if you ask me mutual fund versus stocks, I would always say that investing via mutual funds is always good, because I like taking risks. When you go and buy stocks, you are taking more risk. When you go it via mutual funds, you are appointing a person, right? You know what is an expense ratio. That is why I say always look at your scheme information document before you invest. These are not just words that I say. I really mean it. If you are not reading your scheme information document properly, how would you understand what is expense ratio? What is the objective of your fund? What is the time horizon that the fund manager is asking you before you invest? You are not only looking for returns. Just because my friend has bought a particular fund and the fund has done extremely well, you don't go and buy that particular fund, right? That is why do not chase returns. Look at your risk and then go for those returns. If you're, one thing you have to understand, you would be punished for taking more risk. You could be rewarded for taking more risk. You need to keep this thing in your mind, right? So if you're not willing to take that kind of risk, it's okay. And so this is the first part to it. Second part to it is, you are paying a certain amount to fund manager. Let the fund manager do his or her work. Did he leave his job? No, he did not. Most of the fund managers, they look for prices of the companies to go down when they are, creating a particular portfolio or, a fund. And this is a time when the markets have actually drastically, there's a drastic market correction. So yes, fund managers would want to invest in companies, right? So it's a win-win situation. I know that, for some time, it will take time to recover. Say 12 to 24 months it could take to recover. But having said that, it is very important that you understand, giving them this 2-year time frame, of course the markets will do very well and it will recover, means the market will recover. There are signs of recovery. We have seen that based on our experience in the past and on looking at the history, because the markets have not stopped anyways, right? So you need to keep that thing in your mind. Moving on, your next question was individual stocks to buy. See, I never tell you that you should go for individual stocks without doing proper fundamental analysis of the company. Certain things are very important when you look at any company. What is the market share of that company? What is the market cap of that particular company? Is it a safe company to buy? What is the debt value of that company, right? How much debt the company is having right now? Because I've always told you, whenever, equity holders versus debt holders, they have to pay debt holders the debt first, right? And then it comes to equity holders. So it's very important to look at the all these parameters in any particular company. And having said that, I would say that certain stocks are good. And one of the question was on IndusInd Bank. I think the person would be aware of it. Now, we know that IndusInd Bank wasn't doing very well anyways. Pandemic, obviously, the stock did fall even more because of the crisis, the coronavirus thing that has just come. But IndusInd Bank wasn't doing well. IndusInd Bank was, they had given loans to companies which did default, like IL&FS, and the loans were to the tune of 3,500 crore rupees. So apart from that, the Yes Bank, when it got down, there was a spillover effect. IndusInd Bank has exposure to even telecom sector, and we know telecom sector wasn't doing very well. So there are certain things that you need to be very sure of. It's just not about the pandemic. Obviously, pandemic added to the woes of that particular company. So those stocks even, they got further beating from the market. And that is what is happening. But there are certain stable companies even right now. And the sectors which I have always told you, see, you need to diversify your sectors. Infrastructure is important. We know it will grow. But during the times of lockdown, we know that construction, manufacturing, these are the sectors which would not be doing well. But now, there has been an announcement that certain sectors would be allowed to work, they'll come back in action. Manufacturing is one of them. So we might see that happening soon, but there are certain sectors which you must invest in. For example, consumption. Come what may, the demand of that particular sector will not go down. Look at the stock like Britannia. We know how Britannia has been performing, right? Obviously the prices, there has been a price correction, there has been a fall in the market, but you can still see the stock is recovering. It has moved up and there's very good levels to buy at. But shall I go for only Britannia? I would say no. Diversify. If you do not know how to diversify, let the fund managers do their work. Invest via mutual funds. Look at the kind of stocks the particular fund is having. Look at the percentage amount that particular portfolio is having. So those are the ways you need to improve, how you look at a particular fund. Asset allocation plays a very, very important role in such a scenario. I'm saying that invest in government bonds. Invest, have 10% of your investment in low cost low risk profile. Have certain amount of investments in index funds, because index funds are mirroring the index, right? You can take Nifty 50 index fund, Sensex index funds, those are the funds that you should look at. You must have investments in these kind of categories. It's not just that you should always choose, returns versus anything else. Asset allocation plays a very, very important role. If you do not know, there's a category in mutual funds called balanced funds, aggressive hybrid funds. They are rebalancing your portfolio every now and then, looking at the kind of turmoil which is going on in the market. If you do not want to take more risk, then why not equity savings fund, right? Have certain allocation in that. In gold fund, you need to have certain amount in gold, because when equity market crashes, then of course gold is like a safer haven, right? These are the things, and that's how you should create your portfolio. You should have an investment in FDs. I'm not saying do not buy FDs. Obviously, that's a source that will keep your capital protected. So certain amount in FDs is also important, and that is why, certain sectors like consumption, pharma, IT, these are the must-haves in your portfolio. Whenever you're buying even a mutual fund, look at a proper thing. You must have good exposure to financial sector. But along with financial sector, what are the other things and what are the other sectors that will make your profile, look more better, and it will not, be more vulnerable to such an environment what our country is looking at right now. So that's my only thing. See, we do not know, we know the problem. That's the best thing. We know that it's coronavirus and we are looking ways to contain it, right? Obviously, everyone is working towards it. We will have a solution soon. But now that you have already invested, you need to hold on to it. Hold on to your horses, wait for certain time. Do not just get into a panic mode because one of the persons suffered. Maybe he wasn't that agile. See, I have also invested, but I know that the markets will recover. Otherwise, the markets would have been closed by now, right? So those are the things that please look at. And the questions that you've asked me, my NAVs are falling, shall I redeem my investment? No, you shouldn't redeem right now. Let the markets get back, let them recover a little bit, and then you can move on if you want. Why is more important than where you are investing. Why you are investing, understand that. When do I invest now? You should invest right now if you're looking for investments. Otherwise, I would say no to investments if you are saying no to risk, right? That's the second thing. Balanced funds, are they better than equity? See, it depends. Balanced funds give you that kind of stability, and because they have debt aspect to it. So obviously the risk is lower, and I have always said that you want to get into riskier assets, that's completely up to you. I'm not saying no to it, but the kind of allocation you have, how much percentage you are into risk is important here. So I would say stick to a little amount of your investments should definitely be in balanced funds, because balanced funds anyways, they have 65% to 70% investments in equity category. So why not, right? Aggressive hybrid, because they do the right kind of rebalancing. So yes, balanced funds, of course, that's a big thumbs up. Mid cap versus large caps, of course I would say large caps, because the companies market caps, the companies who these large cap funds has companies with larger market cap. So why not to stay with those larger market cap. Market cap is a must to see when you look at any particular stock as well. So it's very important which individual stocks to buy. See, I don't know which individual stocks you should buy, but I would say if you also don't know, then please stick with mutual funds. And I never advise people on a particular stock. My always solution to your question is stick with mutual funds, because this question is coming up, which individual stocks to buy, because you're not sure how to do fundamental analysis. And until and unless you are thorough with your fundamental analysis, you should not be buying stocks for sure, right? Which sectors should I choose? I told you financial sector is good, consumption sector is a must, pharma, IT, these are exporters, pharma and IT. But these are the sectors which will never go down. There's never a thumbs down. Maybe they will go down for a while, but they will move up as well. Lump sum or SIP, I would say that these are two different strategies. If and all, SIP gives you a good rupee cost averaging. So definitely investing via SIP is a great means to be in. But lump sum right now is also a good strategy if you're looking for investments, because you can buy more units. And fund manager also needs money right now, because he also wants to buy the scripts at the prices which are available right now. They're really attractive, they've corrected drastically. So those are the things. And looking at your risk taking ability, you should be investing. How much time it will take to recover, the markets? It will take around 1 to 2 years, I would say, for recovery. But otherwise, I would say just stay invested. Do not be in a panic mode. Why is a more important question to address rather than where. And on that note, I hope that certain things in your mind would be clarified right now, would have got clarified right now. Asset allocation is very, very, very important. Please work on it right now. It's a lockdown period. It's very important that you invest in right asset classes. What is asset classes? Equity, debt, hybrid. Where do you want to go? You want to go in everything. But how much? What should be the allocation? Looking at your risk appetite. Put your goals in place. Put your risk appetite in place. Look at the allocations that you have. You need to have investments in all the asset classes for the right kind of portfolio. And on that note, thank you very much for listening to me. And do not forget to subscribe my channel. I know a lot of people would differ from me, but it's always good to have different opinions, because that's how we can work together. All the very best with your investments.